Time to put the spotlight then on neobanking startup Jupiter. The company has secured an NBFC license from the Reserve Bank, and this is going to be a development that will help it dole out credit from its books. Joining in right now is Jitendra Gupta. He is the founder and CEO at Jupiter. Jitendra, thank you for being with us on Startup Central. So, a pretty significant development for the company, because otherwise you've been scaling up your lending operations via partnerships and partner NBFCs. Give us a sense as to what exactly this news, getting the license, means for Jupiter.
Sure. Thanks for inviting on the show. For us, this is a significant business development. The reason for that is, if you look at our business model today, we work with the Federal Bank to source deposit accounts and to monetize on those customers. Either we have to co-lend with the bank, or we have to issue the co-branded credit cards with the bank. And I think with the new digital lending guidelines, to co-lend, only a regulated entity can co-lend with the bank. So from that standpoint, the license was kind of necessary to start the relationship with the bank on the co-lending side. So it gives us a huge leg up in our monetization journey going forward. And plus, the lending is all said and done is a risk management business, and the risk management business is better done when you're regulated. In my view, ideally only the regulated entities should be in the risk management business, and because RBI really cares about who is lending, the terms of lending, and how the risk management business is being managed at a portfolio level. So all in all, we are pretty excited with this development.
Oh, yes, indeed. So let's get in more perspective. How much are you, as of now, looking to invest into the NBFC? Who is going to run this, and how is it going to really be housed? Because I understand it's going to be under a completely separate entity.
Yeah, this is a separate entity in the Jupiter Group itself. We are capitalizing the company with the equity of almost 100 crores plus. At the same time, we are also in discussion with banks to raise debt money. In fact, recently, like last quarter, we also lined up the venture debt from a couple of venture debt guys for the same lending operations. So we're looking this year, this financial year, the disbursements to the tune of 600 to 700 crores.
Okay, fair enough. Now, you've got a number of marquee investors, likes of Matrix, Sequoia, Tiger Global, etc., that are on board. Just give us a sense as to what the total fundraise is and who some of your key investors are.
Sure. So we have raised money over 3 rounds so far. We started the company in 2019. So it's been over 3 years now. We have raised so far $162 odd million from a total fundraise standpoint. Out of that, the last round we raised was $86 million. The key investors, like what you mentioned, Sequoia, Matrix, Tiger Global, but the other key investors are QED investors and New Bank. Now, QED, just to mention, is the fund which is founded by ex-Capital One founder in US, Nigel Morris. So they come with huge experience of managing credit businesses or bank-led businesses or the credit card businesses. So we gain a lot from their experience. And New Bank is one of the largest digital bank in the world, based out of Brazil. So we definitely get a lot of guidance from them on our scale up and how to manage on the operation side.
Okay. And you're on the cusp of becoming a unicorn, a soonicorn. So take us through your valuations at present. And are you looking at any further fundraising rounds?
So we are not raising money at the moment. We are pretty comfortable with our fundraise. In fact, we have not used any dollar of our last fundraise yet. So from that standpoint, very, very comfortable. I think this whole unicorn, in my view, is a vanity metric. Our real goal is to scale revenues. Our real goal is to create a sustainable business, and I think that is what we are focusing in coming years. So we are really not focused on how do we become into the unicorn club or some other club which startups want to chase for. We are outside of that.
All right, and walk us through now how this move of securing this NBFC license is going to help bolster your revenue stream. What do you currently enjoy by way of revenues, and how is it looking to increase further? What kind of margins as well in lending will you likely see now? What is, some of the internal targets you have in mind?
Sure. So as I said, that our business model is to create a relationship with the customer on the deposit account, which we work with Federal Bank, and then monetize through lending and credit cards, co-branded credit cards with the bank. Now, on the lending side, we already started lending 5 months back with one of the partner NBFC. We have already disbursed more than 100 crores worth of loans so far. This month, we disbursed close just short of 25 crores for the month. And I think we were kind of holding on our scale up, one, because we were learning what kind of risk metrics play out from a portfolio standpoint. And second, we are waiting for the license to come in to start the longer duration loan. So far we are restricting only loans up to 6 months. So from a revenue standpoint, generally the revenues are revenue profile increases automatically when you do a longer duration loan and a higher ticket loan. So which is what we'll be starting from the next quarter. So all in all, I see our revenue scale up happening significantly this year, and our net margins, like overall margin in the lending business, the net interest margin, which we are clocking, are close to 500 basis point. We expect that to increase by 200 basis point or so. So all in all, our net interest margin, we should clock around 700 basis point going forward.
Okay, what's the current loan book that you have at present, and what's the outlook on growing that?
So as I said, our loan book, so disbursement, we are done close to 100 crores. The loan book is close to 60 odd crores out of that, because we are mainly doing the short duration loans. But this year, our focus is to grow our loan book close to 500 crores.
All right. Just walk us through the outlook then down the line as to how you're looking at your existing customer base really expanding and the kind of scale that you'll be really operating and driving the business at.
Sure. So if you look at our business, so we have three verticals. One is the deposit account in partnership with Federal Bank. Second is the lending vertical, and third is the investments, which is the mutual fund distribution vertical. On the lending vertical, as I said, we have been there in the business for last 5 months. On the investment vertical, also we launched mutual fund distribution almost 6 months back. Now we have more than 100,000 investing users. This month, the users, investing users are doing more than 300K SIPs. So we are seeing a very organically growth there. Going forward, we expect, so today we have 2.3 million customers. Going forward, we expect this base to grow to 4.5 million customers in next 12 to 18 months. So yeah, all in all, our focus is that how do we entrench deeper relationship with customer by offering multi products in terms of their financial services needs. So we'll continue to expand on that and going deeper with our product bouquet in these customer set which we're acquiring.
All right. Walk us through, the outlook when it comes to the kind of ticket sizes that you currently enjoy. What is the average loan tenure currently, and what is the outlook?
Sure. So we today mainly do loans up to 6 months tenure only, because one, we just started, so we wanted to see the performance data in a shorter duration, the feedback loop from our risk metrics in the shorter duration. So the average ticket size, we're doing only 30K, and up to 6 months tenure. Going forward, we'll be expanding the tenure to 18 to 24 months. And the ticket size I expect to increase to 75K to 100,000 rupees on an average. So that's what we should be launching next quarter onwards.
Okay, and finally, walk us through your outlook in terms of the vision for the company after having secured that the NBFC license. This certainly puts you on a different orbit, how you're planning to deal with competitive intensity, and where you see the company headed over the next few years.
Sure. So if you look at the financial services market in India is like very, very big. So frankly, while the competition is there, but I still see a lot of opportunity considering consumers are moving to digital world faster than before. People are expecting personalization in financial services as well, not just your commerce or food ordering. So lot more consumers are adopting newer offerings like us. And I think that is naturally giving us a growth at a lower cost of acquisition of the customer. So our aspiration ultimately is where RBI forms some guidelines around digital bank, and we become eligible to apply for that license. That is our aspiration ultimately. But that is yet to be seen when and how that happens. But till then, we'll continue to operate as an NBFC and a financial services platform, and continue scaling that. I expect in next 4 to 5 years, in the target group, which we cater mainly the millennial target group below 32 years of consumers, us to becoming the leading financial services platform in that segment.
Best with those goals, and thank you so much for taking time out and joining in on the show, Jitendra.
Thank you.
Well, let's put the spotlight then on the kind of row that's taking place between the former CEO of Twitter, Jack Dorsey, as well as the Indian government. Now, 2 years after the farmers' protests, the former Twitter CEO Jack Dorsey has alleged in an interview that the microblogging site received many requests from the Indian government during the farmers' protests, especially around particular journalists that were critical of the government. The government, though, has come ahead and vehemently rebutted all of those allegations. Let's understand then the row better in both sides of the story. My colleague Sumita Karir joins in with the updates. Sumita?
We will shut down your offices. We will raid the homes of your employees if you do not follow suit. Well, those are the stunning claims. In fact, statements coming in from Jack Dorsey, who's the former Twitter CEO. He said that in an interview to a YouTube channel. Remember, Dorsey quit as Twitter CEO in 2021, and on a question posed by the YouTuber on his YouTube channel regarding how he navigated the policy landscape across the world, being such a powerful platform, Jack specifically said, and I quote him, "India is a country that had many requests of us around the farmers' protest, around particular journalists which were critical of the government, and it manifested in ways such as we will shut Twitter down in India, which is a very large market for us. We will raid the homes of your employees, which they did. We will shut down your offices if you do not follow suit." And this is India, a democratic country. Naturally, that has raked up a political storm. Congress and the opposition parties are attacking the government on these claims that have been made by Dorsey, but reacting sharply to Dorsey's claim and issuing a point-by-point rebuttal. MoS IT and Electronics Rajiv Chandrasekhar called Dorsey's claims an outright lie. He also said the following things. Number one, Twitter was never shut down and no one went to jail. Number two, Dorsey was a repeated violator. He also said that Twitter is a company that believed that it didn't have to comply with the Indian law. Interestingly, he also lashed out at Twitter saying that the company during these periods was partisan in behaving in an arbitrary manner. He was, of course, referring to the time that Jack Dorsey was the CEO, and of course, he was also referring to the leaked documents that came out post Elon Musk took over. Now, remember, Twitter, before Elon Musk took over as CEO, had several run-ins with the Indian government, especially after Twitter tagged some of the tweets as manipulated media in 2021, and more so after the IT Act was tweaked to make intermediary platforms more responsible, and it pushed them to comply with Indian laws.
All right, moving away from that discussion then, there certainly has been a very smart recovery in the stock prices of a lot of these new age tech companies. So what's the view on fintech stocks now? Let's hear it out from Pankaj Murarka, CIO at Renaissance Investment Managers, who says that he believes that the likes of Paytm, Zomato and PB Fintech should be stocks in the portfolio, and he will hold them for the next 5 to 10 years. Listen in.
From our point of view, these are very long-term holdings, which we probably intend to hold over the next 5-10 years and maybe longer as well. So these are still very early days for these companies. I think these companies are still very young in that sense. And there's a very long growth curve ahead for these companies. And what really excited us then and continues to keep exciting us when we look at these companies, more importantly, is at a very early stage, a lot of these companies are operating in a oligopolistic market structure. Meaning, just think about it. If you want to, we want to buy a shampoo, there are about 10 companies out there manufacturing shampoo, or 10 companies out there selling biscuits, or there are 40 odd cement companies out there. But if you want to order food, then there are only 2 companies out there, and they control 95% of the market. If you want to do digital payments, then there are only 3 companies out there, and they control 95% of the market. In my experience of investing, I haven't seen any player making loss in a oligopolistic industry structure. And the good thing is these companies, given the kind of consolidation that has happened for multiple reasons over the last 2 to 3 years in these internet businesses, are operating in an oligopolistic business environment, which effectively means I think the long-term profitability of these businesses will be significantly higher than where their current profitability is. They've already made a pivot from loss-making to cash-generating profitable businesses. But I still think that the long-term profit margins, profitability of these companies will be significantly higher than what it is today. And on top of that, you will get very strong growth in terms of these companies, one, acquiring new customers and mining existing customers deeper. So if you ask my view, I think these are investments which are to be held over the next 10, 15 years.
Okay, so you own Paytm, you own Zomato, you own Policybazaar. These are 3 consumer and fintech stocks you own, right?
We also own InfoEdge. It's been a traditional holding for us, which we've held for a very long time, and we think, one of the best internet stocks in that sense.
Based on what your understanding of the business model is, the 3 stocks, and I'm keeping InfoEdge aside because it's a different stock. It's not a consumer tech. It's a cash generating machine, if you frankly ask me. You are happy to own Paytm, Zomato, and Policybazaar for next 5 to 10 years. I mean, your view is that these are the portfolio stocks for next couple of years, not for couple of quarters and couple of months.
Absolutely, Nikunj, I think so. I think these businesses, their profitability, meaning I don't see any reason, it might sound slightly audacious, but I don't see any reason why these companies, let's say 10 years out, cannot make $400-500 million of profit. Understand the next generation, if I look at in my home, meaning there's something which is Zomato virtually is being used on an everyday basis, much to my disliking, and I think that's the case with many households. And today, Paytm or Google Pay, digital payments has become an inherent part of our lifestyles. I'm sure all of us are using it.
Much to my disliking, Zomato used every day. Whom are you referring to?
Meaning all of
Yeah.
Today's consumers, which we can relate with our children, they're born digital. They live in a digital world. And these businesses are born digital. So these businesses are very much aligned to the next generation, and they will become the biggest spenders over the next 20-25 years. Mark my word, when this whole internet revolution happened in US 20 years back, that was driven by the new generation adopting to digital, because that generation was born digital in US, and they led the whole growth in whole digital adoption in US, and which is where the internet businesses had a J-curve growth in US. I think in India, we're just 20 years behind that, and we have demographics in our favor.
Well, let's move on then and map the AI disruption growth potential. Rajan Sethuraman, the CEO at Latent View Analytics, spoke with us earlier today, and he says that he sees an uptick in momentum for AI queries and that he expects the AI deal flow to increase over the next 2 quarters. Listen in.
There is a lot of increase in the momentum and the volume of conversations. Of course, organizations are still figuring out in terms of how they make use of some of the new technologies that are emerging, especially given that many of them are in the open source space. So, for example, with ChatGPT and generative AI, questions are revolving around, can we create our internal versions of these technologies so that we can, for example, better analyze the data that we already have with us. Could be structured, unstructured data, a lot of text data that organizations currently have coming in from their multiple systems of record and transaction processing system. So generally, there is an increase in the interest levels in terms of how these technologies can be leveraged. But initial attempts and initial set of ideas seem to be focused on just better understanding data that they already have using the power of these technologies.
So Rajan, when do you expect the actual order inflows to start coming in? Because these are just initial level talks, and any more details in terms of what could be the color and nature of these deal flows?
Yeah, so we have started seeing examples already where organizations are taking outside help to help them, even if it is with just analyzing data that they already have. As with any outsourcing idea, typically you look at can you do it faster? Can you do it at a lower cost? Can we get the right kind of experts involved in the program? So those are the things that are driving the interest and the deal flow. I think it will pick up in the next 1-2 quarters. Organizations will be able to better crystallize what they want to do. So while initial ideas will be around data analysis, there'll be many more opportunities for them, right, in terms of how they can look at understanding customers better, for example, looking at inventory cost reduction, for example. So all these things can be impacted using the generative AI. So expecting that in a quarter to 2, we will start seeing more concrete deals with larger initiatives as well.
How many companies do you think can genuinely transition into the AI space? Today, everybody is claiming that, okay, it's this honeypot which we want to go after. But do you think Indian companies, in a sense, may really not have the real transition per se, and we may just be on the sidelines?
Not really. I mean, if you look at the maturity levels of organizations, right, whether they are in India, the US, or the Europe, I don't see a whole lot of difference. There might be some sensitivity around usage of data. I mean, in Europe, for example, you have challenges around GDPR, right, and data confidentiality, and one wants to be absolutely certain, right, in terms of how people are leveraging data. But otherwise, general interest and maturity levels, I don't see a whole lot of difference between different geographies. What matters, though, is the maturity level of the organization itself, in terms of are they already making use of data for driving understanding what has happened better, what we call look-back analytics, diagnostic and descriptive. You need to cross that bridge first, right? And then look at how can you make use of data for predictive, prescriptive purposes, understanding what is going to happen and what should you do about it. The newer technologies tend to play more on the predictive, prescriptive side, but that doesn't mean that you cannot kick off smaller initiatives to better understand those ideas. So
Thanks so much for watching the show. We'll catch you same time tomorrow. This is Goodbye on Startup Central.